Welcome to Xcelerate with Shawn Redford. The Xcelerate Xcast is designed to provide Experior agents with simple, repeatable, and profitable strategies for you to grow your business. We will share ideas on how to identify ideal target markets and new opportunities, improve your conversations with proven scripts and storytelling, and finally, we'll also meet with industry experts and our partner companies to ensure we're up to date with the newest technology and insights, all so you're able to accelerate your growth. We hope you enjoy Xcelerate with me, your host, Shawn Redford. Hello, Experior champions, and thank you for joining us for today's episode of Xcelerate with Shawn Redford. Today we'll be discussing RRSP Loans with special guest Michael Capello, who is the Business Development Manager at B2B Bank. Michael started his career in the financial service sector in 2007. It started with a role in customer service. After mastering this role, he moved on to the inside sales team. And after 2 years with the team, he was promoted to a Business Development Manager for the bank. He has been in this role now for over 7 years and has covered several regions within the province of Ontario. He is very knowledgeable in all aspects of the lending business offered by the bank. I'm now excited to share my conversation with Michael Capello. Hello, champions. And once again, thank you for joining us today on Xcelerate with Shawn Redford. Today, as I said, we've got our guest, Michael Capello from B2B Bank. Thank you for joining us today, Michael.
Thank you very much for having me, Shawn. I do really appreciate it, and I'm happy to be here.
Well, we're thrilled to have you. I mean, B2B Bank has been in the lending, investment business, banking business in all facets for a number of years. I am new to Experior, haven't had an opportunity to work with B2B Bank in this role, but Michael, you and I have known each other for a while now on the trade show circuit, and I've worked extensively with B2B over the years. So what we want to talk about today with our audience is the importance of RRSP loans. How do they fit? What are the risks? What are the pitfalls? But what are the advantages of utilizing an RRSP loan program? So maybe you can give us a little bit of a kickoff and some insight into it.
Yeah, for sure. Thank you for that warm introduction first, as well as Shawn. So we're going to talk a little bit about RRSP loans today. And some of the really biggest advantage for the average consumer is getting that money invested in the market today. We know with RRSPs, we have a very long time horizon. And we know as Canadians, we actually don't save enough money. That's the biggest pitfall for us lately. We're not saving. And, the baby boomers did a good job saving, but the millennials and everybody else afterwards, the savings not there. And unfortunately, in a day and age like today, we can't count on those big company pension programs. I know my old man's got a nice one, but unfortunately, I think Shawn and I are we're out on our own. We're building our own saving because the goal for everybody is, build some wealth and have a lovely retirement. We want to enjoy our retirement, right? So an RRSP loan is a good way to get you there.
Absolutely.
And like I said, the biggest thing is like I said, is getting that money working for you today. The good thing with Canada and having this RRSP program is that when you're putting a large sum of money into the RRSP, you get a nice thing that's called the contribution receipt. Mm-hmm. So we're going to get a larger refund. On average, for most Canadians, usually your refund's about 30% of what you put in. So example, you're putting in $10,000, you're going to get a refund about $3,300, which is a nice little kick, most clients will take that refund and, talk to Shawn and I will say, hey, well, let's pick that trip down to Mexico, right? Because we all know our Canadian winters are so lovely in this country, right?
Yeah.
But the best thing to do as an agent and what you guys do at Xcelerate is you got to really help your customer control that refund. So like a good advantage to that, you can use that to pay off some pre-existing bad debt. We all know the way things have been the last couple of years. So a lot of consumers have actually really increased their debt level. So an RRSP loan is a good way to help kind of get that debt level down. And it's kind of the age-old saying of good debt versus bad debt, where the RRSP loan is considered good debt because you're using it to help build your wealth. And you can also use that refund to actually pay down some of that bad debt, which is a great advantage for doing the loan. So that's one thing to look at. Like I said, another thing, as I mentioned, getting that larger sum working today. If you actually talk to most of your customers, we have this great thing in Canada is what we don't use our RRSP room that's generated each year, which is about 8% of our earned innings. You can actually carry that forward. So a lot of people have a large carry forward room. So to kind of take advantage of that, we can look at using an RSP loan to kind of maximize that return, that actual carry forward room, and get the money invested in today. So
Yeah.
another great option. Some people say, okay, Mike, that sounds great, but my clients can't really afford an RSP loan. They can't afford those payments, right? Because of what it is. But one thing we can look at, another great advantage to look at from a customer perspective too, is saying, well, if they're already saving today, so an example, if they have a pack running for, let's say, a couple $100, another option we get to just to kind of say we're not going to add more strain on them financially is we could say, instead of doing $200 as a pack, let's figure out what we could do for a loan payment for $200. Flip it the other way, so that way we can get that larger sum working today, get a bigger refund, versus doing a pack, which is great. I love packs; they're amazing, but we get that money working today up front. And the only downfall with a pack, guys, is that packs can be stopped. In most cases, a customer can actually call a fund company directly and stop the pack. With a loan payment, it's a type of forced savings, so the customer knows they have to pay that. And if you talk to the younger generation, and I'll be honest, I talk to my wife about too, and this is the way it works in our situation. It's like, okay, what are our bills we have to pay? Okay, we got to make that car pay. We got to make that mortgage. Oh, we got that loan, that RSP loan we got to pay off. Okay, now that we've paid all our bills, we've got $50 left. Maybe we can grab a pizza. Can't go out anymore for dinner for $50, right? So but just something, from an ideal perspective, it's kind of, what do I have to pay? And that's the way Canadians think these days, is kind of, what do I have to pay? So by doing that forced savings with a loan, they know they have to pay it. Whereas in the pack situation, they can say, oh, things are getting a little tough. Maybe I'll stop that. And they get off track, right? Mm-hmm. And the whole point why Canadians seek professional financial advice that Xcelerate offers is basically to keep them on track and get them to where they want to go.
Yeah, now, keep them accountable, right?
Right. Yeah. Now there are some downsides to RSP loans. Every product's got an upside. Every product's got a downside. The biggest one is obviously, like I said, is the loan payment. So the customer is responsible for making that loan payment. And of course, being a loan, if they're looking to obtain other credit, for example, like buying a house or a vehicle, that could affect their affordability of what they could buy, because they do have a debt obligation for the loan. That's the biggest disadvantage from the RSP loan perspective. From an investment standpoint, people may say, well, we're paying this interest rate on this loan, and the way things are today, rates are a little higher. So am I really, I'm paying, let's say, a certain rate, and then what I'm actually making on the refund on the return side is not working out. But the biggest advantage, counterpoint to that, is that because an RSP has a large time horizon, for example, if someone's 40 and they're not rolling it into a RIF until they're 71, that's 31 years of investment. So in that 31 years, there's going to be ups in the markets, there's going to be downs. But as we trend upward and to the right over that time horizon, we're going to win out, and we're going to beat out against that interest. So people may look at that interest cost as a negative, but in actuality, the best thing to do is getting the money working today. And my manager always says to me, Mike, it's not about timing the market, it's about time in the market. Mm-hmm. And that's the biggest thing that people don't consider. They go, oh, I don't want to buy now. What Warren Buffett always said, buy low, sell high. But if you're not in the game, you're not going to take advantage of everything. So all things worth considering.
And to your point about that, actually, I'd like to just highlight a couple of things that you've said for our audience, because I think you've made a couple great points. First, good debt versus bad debt. I think it's really important to highlight the difference. And as you had pointed out, the good debt is that debt which allows you to create wealth down the road, right? That is good debt, as opposed to car loans or credit card loans, which are not creating wealth down the road. You're not building an asset, you're buying a depreciating asset, or you're paying expenses that don't give you any wealth creation down the road. So that is a key differentiator here. So understand the benefits of different types of debt. The other thing that I love that you said was what to do with the refund options. And you know what? I think sometimes you should reward yourself and take that refund for a vacation. And that's okay. You shouldn't feel guilty about that, because basically what you're doing is you're trading the loan payment for the vacation debt, right? But you're allowing yourself to take money that you would have otherwise paid to the government in taxes, pay that back to yourself by paying the loan payments over time. And then, you're taking that reward, taking that $3,000 refund in your example, and treating yourself. That's okay, because now you've got that that loan working for you inside your RSP portfolio. So I don't think that's necessarily a bad thing, but I think the better financial decision would be to pay down that bad debt, get rid of it as fast as you can, and then reward yourself down the road. You also talked about converting your PAC payments to loan payments. And I think that's a great way to take advantage of that RSP carry forward room to get more money working for you in the market. But I think the thing I wanted to highlight there is it doesn't have to be a one or the other. If you're making a $200 a month PAC payment, you could take $100 of that and get a loan where the loan and interest payments are going to be that $100, and then continue with the PAC. Because, there is a risk, as you also pointed out, some of the downside risks to leveraging are, and it is leveraging, right? Leveraging is borrowing money for the purpose of investing. That's what you're leveraging. You're using somebody else's money, which is great. It magnifies your returns, but it also can magnify your losses. So you need to be cognizant of the risk in the market. But to your point, it's time in the market. That is what is going to reward you in the long run. You got to be in the market to make any money. So you can't sit on the sidelines forever. So I think a combination and talking to the advisor, and that's what, as you pointed out, our Xperia agents are those advisors, the ones that are there to consult their clients and keep them accountable and keep them on track and give them options and choices. So great points so far, Mike. I really appreciate it.
Yeah, well, thanks. Yeah, this all kind of things we talk about, and just ways to kind of, with the Xperia agents as well, with their clients, to kind of get the juices flowing, like get people thinking about things a little differently, right? And one key thing you mentioned there about like leveraging, using someone else's money to make money. If anybody looks up any of the really, really rich people in this world, they don't use their own money to make money. They always use someone else's money. And that's just the way it is. If you talk to anybody, look at anything, it's all about leveraging and using that. So, I know sometimes the RSP loans might not be the best fit for every customer of yours, but there is potential within the customers you have, and there are candidates out there that need it. And one thing I did want to mention, we were talking about the extra room and so on. There is a lot. Like I've been looking at some studies recently, and average Canes have anywhere from $40,000 to $50,000 in carry forward room. So they're not utilizing their RSP. And like I said, RSP, we got some other things out there. There's TFSAs, there's the new home buyers RSP out there. There's some other advantages, but the RSP does still fit for a lot of Canadians, and it's about finding the right Canadian that's going to work for. And the loan is the same thing. The loan will fit for some people. It's not going to fit for everybody, right? So it's just a matter of weeding those people out. But there's opportunity out there. So,
and that's you brought up another great point, Mike. We've been talking about RSP loans, but we have a new investment product in Canada, the First Home Savers account, the FHSA.
Yep.
I'm still getting used to that, man. And that's a great option, which just like an RSP, when you make a contribution to it, provides a tax credit. Now, I think a common thing that we need to address is, the elephant in the room, RSP or FHSA or TFSA. Okay, when should you invest in one or the other? And I think the most logical response to that is if you are in a low tax bracket. So you're in the 20-30% tax bracket with the expectation that your income is going to continue to rise and eventually you will be in a higher tax bracket. Maybe it doesn't make sense to make a contribution to an RSP at this point. Maybe you should look at either an FHSA if that's a goal that you're working toward, where you still get the tax credit. It doesn't reduce your RSP contribution room, but it allows you to leverage and get more money working for you sooner. So hopefully you can buy that house a little bit sooner. But if that isn't one of your strategies, or if you already own a home, then maybe if you're in a lower tax bracket right now, you should look at the TFSA for now. And then as your income grows, you can always move that money into an RSP down the road or do the RSP loan down the road. Did you want to add anything to that, Mike?
Yeah, I was going to say those are all great points. Like the RSP, it's been out for a while. The TFSA is a newer product, and obviously the new FHS. I forgot the new home buyers RSP. All a great new product too. So it's about finding the right product for the right Canadian, right? It's like you said, like I kind of look at it in segments, right? So if you're in the 20s, 30s and you're working, And let's be honest, when you're 20, 30, especially if you've been around a while, like, I'm 40 years old. Shawn, he just turned 30. He's a young guy out there, right? So we all know that, right? But if you're in your 20s, 30s, you're not making the big bucks yet, right? So you're not paying in the highest tax bracket. So at that point in time, it's either going to be TFSA, or if you're looking to buy a home, then this program is out there. Take advantage of it. Like, I didn't have that growing up buying my first home. I wish I had it. I've got a couple of kids. They're going to definitely take advantage of it once they can do so, right? Let's be honest. But as you're getting older, like you're in the, your golden, not your golden years, but your prime earning years where you're making some good money and you're paying more tax. Because let's be honest, there's two truths in life: death and taxes. And in Canada, we all know we pay a lot of taxes. So we've got these programs in place, and that's where the RSP fits in. It's like, I haven't been maximizing my retirement savings, but I can get these refunds and use that money elsewhere, either reward myself, like you said, take that trip down to the Caribbean or Europe or whatever, get a little sun, or, pay off some bad debt, or, reinvest it back in the market is another great opportunity too.
Yes.
Then that's where you look at the RSP. So it's all about finding where those products fit in. And then obviously, there's the other one, non-registered accounts. Those also play a part for Canadians as well too. So there's all different things to look at. And like I said, it all depends on the customer, right? So all great things. So it's about finding the right fit. You got to check the right box for the right person based on the situation. So that's what it comes down to.
We're going to have you back, Mike, in a future podcast to talk specifically about non-registered investment strategies using borrowed funds to accumulate your wealth. So we'll do that in another day, because this one is specifically about RSP loans. And before we start talking about B2B Bank as a partner of Xcelerate and our agents, I just wanted to, I was reminded recently as I was thinking about this podcast coming up after we planned it, about a strategy that I used to employ in my own practice. And I used to brand every one of my marketing concepts, strategies, so that it would allow me to differentiate myself from the competition. So I never said, we're going to talk about an RSP loan today. What I did talk about was, I'm going to show you how to axe the tax. I've created a strategy called Axe the Tax, or I call it the Golden Touch, or what I branded everything. And it reminded me of this one strategy that I used to do. So how it worked was like this. Let's say your client is contributing on a monthly basis, and I'll keep the math easy. Over the course of a calendar year, the client has invested $10,000 into their RSP. Okay, so you've invested $10,000 into your RSP. You're going to get, and I'll make it simple. Let's assume you're in a 50% tax bracket. You're going to get $5,000 back for that $10,000 contribution. Okay, because that's how it works. Then what you do is you say, you know what? How much money did I have to actually earn in order to get $10,000 in my bank account to put into the RSP? Well, at a 50% tax bracket, I had to earn $20,000. I had to earn $20,000 to have $10,000 go into the bank account because they withheld tax at 50%. And then I put that $10,000 into my RSP, and I know I'm going to get $5,000 back. Well, how can we make sure the government gets none of that $20,000 of earned income that I had to earn in order to make the $10,000 contribution? Well, what we do is the $10,000 that we paid to the government before we got our $10,000 in the bank, we're going to go to B2B Bank and we're going to borrow $10,000. Now, we have a loan for $10,000, which is also going to yield us a $5,000 refund. So now we have a $10,000 loan that is going to yield us a $5,000 refund. We already invested $10,000, which is going to yield us a $5,000 refund. Mike, you're really a whiz with the numbers. If we've got a $10,000 refund coming to us and a $10,000 loan, how much loan are we going to have after we repay that loan with our refund?
I think it's going to be a big zero there.
Big zero. That's right. So now what we've done is we've borrowed $10,000 and created an additional $10,000 of wealth in our RSP, tax sheltered for the rest of our working years, and the government got nothing. So I used to call that the Golden Touch. And for our audience, in the back office, what you're going to find is a calculator that I created that allows you to just plug in the tax rate, the marginal tax rate for your client, and it'll tell you how much loan based on their tax rate and based on whether it's been a lump sum contribution that they've made in the calendar year, or maybe they've been making a PAC contribution of, say, $500 a month. So they've already put $6,000 in over the course of a year. based on their tax rate, how much should they borrow in order to yield a total refund that will completely pay off that loan. So look to that. And if you've got any questions, feel free to reach out to me at any time.
Yeah, and that's a great strategy. I call it a different name. We at B2B call that the gross up strategy, but
the gross up strategy.
You're grossing up your income, to get the most back, right? And that's a great option. Like you said, you do the loan. You do it in January, February. You may have a few small loan payments that come out before that $10,000, but the interest on $10,000 over 3 or 4 months, negligible.
Compared to giving that money to the government, right?
Oh, no, exactly. And putting it in your pocket, right? Because let's be honest, the government, what do those guys do these days for us, right? But anyways, let's get political. I used to live in Ottawa for a few years, and when I was wholesaling before I moved down closer to the Shawn and Michael head office, so a lot of meetings used to be very political sometimes. But
I bet.
Enough on that. Yeah. So should I jump into it then? We'll just go over a few things, and I can talk about that too.
I would love for you to get into B2B and the value that you offer. So I'm going to share your screen, Mike.
Thank you so much.
Take it away.
I'm going to take it away. So this is just, where are we here, guys? Let's talk RRSP. So basically, I'm going to go through some of the program basics on the programs. We'll talk about the advantages. We're going to talk about some of the stuff that Shawn and I talked about earlier in the podcast here, and how it's relevant to B2B Bank and where we fit into that, and kind of our greatest advantage for you guys. So briefly, B2B Bank, we've been around forever, as Shawn mentioned. I think it's been now like 30 plus years in the industry doing lending. We've been a product partner of Xcelerate, I think, since the beginning, or very close to the beginning for them. So we've been around. We've done some good stuff. I've been around with Xcelerate for a while. You might have seen me on some other presentations as well too. But at the end of the day, my goal here and the goal of my other business development team members is we're here to help you guys. So whenever you have a question or concern, reach out to us. That's the number one thing. Human capital. Like, we're here to help you guys succeed and be successful. Because if you're successful, then I'm successful, and I want to be successful. So quickly about the program, the RRSP loan program. Some of the advantages for B2B Bank. We do offer terms everything from 1 to 10 years. One of very few lenders that can go up to 10 years. So the 10-year advantage, basically, the biggest thing about that is that you can spread out those payments over 10 years. And then really reduce that payment amount for the customer. So that way you're not affecting their cash flow. Multiple funding options.
It's an open loan, right? It's an open
loan. And they are
so
open, yes.
Off at any time.
Anytime. So if you want to, like Shawn said, if you're doing the strategy, he just talked about the golden ticket, right? Or golden touch. The golden touch. I'm sorry, my apologies. I was thinking of Willy Wonka, all those trailers coming out lately. So they are open. So like you do the loan, you get your tax refund, you pay it off in 3 months, not a problem. We can get it paid off. Like I said, very minimal interest you're going to pay on it. So loans are completely open. There's no penalty whatsoever to pay it off. As far as funding a loan, multiple options. Another great advantage of B2B Bank, we deal with basically almost every single product partner that you guys deal with. So we can fund directly into those RRSP accounts. One thing that kind of gets forgotten too, we also can fund into RESP accounts. So if you're looking at building wealth for children, and you want to borrow some money to kind of front load their RRSP account, they will get the grant as the years progress, but we get that money in there working today, especially for your younger children, if you can do it. As for our other thing we talked about, the first home time buyers, as of right now, it hasn't been confirmed we can use an RRSP loan to fund that. We're still working on that with some of the fund companies. So that would be kind of a stay tuned situation right now. But the RRSP and RRSP are kind of your only two options at this point in time. Our loan minimum, $2,500. That's the bare minimum we need to see at least. Our maximum, we do not have a maximum. I kind of say the rough maximum is 50,000, and I'll discuss that later as why that is. And basically, I say our average loan amount we kind of see is anywhere from 15 to 20. That's kind of where we ballpark it at. Excuse me, tongue slurred. So everybody goes, Mike, what are the rates? How much is this loan going to cost me? Okay. So yeah, the rates have gone up. I know rates are up. That's always talking about interest rates. One good thing about rates I can say for the future, the bank kind of keeps saying higher for longer. I personally don't see that's going to be. A lot of the economists I follow see we're going to see some change in 2024. When in 2024, I don't know when exactly. Some are saying Q1, some are saying Q2, but we'll just watch and see. The biggest leading indicator of that is that our 5-year bond yields are coming down, and usually interest rates kind of follow that, mortgage rates follow that. So we'll see. So the good thing with our rates is that they are what we call variable. So it's prime plus something. So if I've kind of circled the 5 and 10 years, because basically anywhere from 3 to 5 years, it's the same rate. Anywhere from 6 to 10 years is the same rate. So you might as well go for the longer amortization. It's the same rate, reduce that payment amount. And as we mentioned earlier, the loan is open, so you get paid off anytime. So if you're looking at a 10-year, yeah, it's prime plus 3.25, which is 10.45. But I guarantee you over the course of that 10 years, that interest rate's going to drop. Now, another thing with that too, as the rate drops, as a customer, you can ask B2B to reset the payment amount to have it kind of decrease, to have it float, or you leave it where it is, and that 10-year loan becomes an 8-year loan because you're paying it off sooner, right? We're getting more down. It's like you're getting more towards the principal. It's like if you have a mortgage and you want to do accelerated payments, it's the same kind of theory on the RSP loan. Now, I tell people that and they say, oh, Mike, 10%. Come on, man. You're killing me here. Like, I'm going to make 7% of the market. Like, that's nuts. Like, how much is that going to cost me? So I've kind of done a little rough math over the last couple of years and where we're at. So, 2021, we had some good rates out there. Our 10-year rate, we're about 5.9% was what it was. And based on a $10,000 RSP loan, you're looking at a payment of $110. Last year, 2022, we were at 865. Payment was 124. And this, 2023, 2024, we're at 1045. Payments $134. But if you look at the difference from 2021 to now, that same $10,000 loan has only gone up about $24, right? So it's not a huge increase. Yeah, the rate's gone up a lot, but the payment has a $24. That's one less trip to McDonald's in a month. Let's be honest. Or if you like Starbucks, it could, a good Starbucks trip. We're talking like the fancy latte or getting the fancy frap and maybe a breakfast sandwich or some kind of a sandwich, right? Yeah. Maybe you get a coffee for your friend, right? So yeah, the rates are higher, but if you look at the math, it's not a huge amount. And like I said, the bigger upside is, 10%. It's a lot, but what are you paying on your credit card? So we talked about good debt versus bad. You're paying 29%. You're paying 22%. Like that's a high interest rate. So
yeah, and just to interject there, Mike, that is when if you are carrying 20% debt and you can convert that 20% debt into a 10% debt by making the contribution to the RSP, taking the refund, and then paying down that debt, that is a good financial decision, a good strategy.
Oh, 100%. That's the deal. Good debt versus bad debt, and you're paying off an investment, right? Which is working for you, like you said. Whereas you're paying that credit card debt, it's you did some shopping for Christmas, or you did some other stuff. So that's not really getting you any wealth, right? Like you bought some clothes. Those clothes are only going to last you so long. That investment in your RSP is going to last you. And, could be 30 years, could be 40 years, 50 years, depending on how old you are. Right? So,
yeah. And so the strategy there that I would recommend is, especially for your clients that are making a monthly contribution to their RSP and they're carrying bad debt, what you do is you stop the monthly contribution to the RSP, maybe reduce it or take that money, use it to now accelerate paying down your bad debt, take the loan for the RSP, take the refund, help pay down that debt as well. And then you've replaced your monthly RSP contribution now with a RSP loan payment. So maybe play around with the numbers. If you were making a $200 a month contribution, take the $200 or take $100, put it toward the bad debt, and then get a loan for $100 a month to your RSP, so that you're still out, your cash outlay is $200 a month. And now you're accelerating paying down that bad debt, but you put money into the RSP to get working for you so that you're not giving up that opportunity in the market.
Yeah, for sure. And like I said, if that bad, that's why, like you said, even if we can't do 200, if we cut it down to 100, let's put that towards the bad debt up front.
Yeah.
Get it paid off, right? So that's the best thing. We want to get rid of that bad debt. And we know if you know anything about anything, the debt levels in Canada have risen a lot in the last couple of years, post COVID. So it's something worth considering, and so on. So as far as getting a loan, people say, well, Mike, how do my clients get a loan? From a credit underwriting perspective, this is what we're looking at B2B Bank. So we look at 4 things: capacity, capital, credit history, and character. Basically capacity is what we call TDSR, so total debt service ratio. So we kind of look at what is your ability to pay for the loan. So the general rule of thumb is we cannot exceed 40%. So that's 40% of your gross income. So to make the math easy, if you were making $120,000 a year gross, so $10,000 a month, 40% of that be $4,000. That $4,000 has to cover your expenses, so your mortgage payment, car payments, debt, plus the loan payment. that's what we got to look at. And we have calculators on our website where you can just plug all that in and utilize the calculator. Okay, I'm good. Or when you actually go on our application system, as you're entering the data, the system will calculate for you what it is. Yeah. So if you start off with a $20,000 loan and you see, oh, I'm at 41. Oh, okay. So maybe we'll shoot for the 10 or 15. Or you leave it at 20, send it in. My team will look at it. And if they go, yeah, this person can't do 20, but we can do 10 or 15, they'll come back to you and counter offer you, say, hey, we can't do 20, but we can do 15 or we can do 10. Perfect. So all great advantage of the BB. Like our goal is to get your customer the loan. If they can't do it for the amount you apply for, but we can do a lower amount, we'll come back with that. Yeah. Capital is kind of what we look at as your net worth. So general thumb is if you're applying for a loan, 20,000, you got to have $20,000 in net worth, positive net worth. So that's kind of when we look at the time horizon thing I was talking about earlier in the podcast. So if you're, 30, 40 years old, maybe you got a house, you've got some net worth, this usually is an issue. If you're 20s, where, you're not in your higher years or you just graduated school, you've got some student loans, you're going to have negative net worth. So the RRSP loan is not going to work for you. And the RRSP not be the best advantage at that time frame. Like you said, TFSA may be better, paying those loans off may be better. But that customer down the road, as they grow with you, an RRSP loan may be a good option for them to get kind of caught up. Credit history, our kind of minimum is what we like to see is 680. And that's what we kind of see. So, what it is. So usually we want to see people, if they're paying their bills, they're not making late payments. They don't have a lot of credit. Like they're not maxed out. So example, by maxed out, your visa is limited to 15,000 and you're at 14,000, right? Like you want to be, in the lower echelon. If you're not maxed out, then it helps bring your credit score up. And credit's one of those things we'll take a look at it. We're going to pull the credit bureau at B2B. It will be a hard hit on your credit bureau. People go, oh, you're doing a hard hit. As long as you're not doing more than 2 or 3 hard hits a year on your bureau, it's not going to affect it negatively. So that's something to keep in mind with your customers. And the last one's character. If you've ever applied for any kind of credit, they'll ask you, hey, have you lived here for 2 years? Have you worked here for 2 years? That's what it is. And if you haven't lived somewhere for 2 years, it's not a problem if you've moved. Like I've moved recently, so it's not an issue, right? It's just kind of where were you before and how long were you there, right? So
yeah.
So
I mean, great
stuff.
programs. Yeah, great programs. So just as we wrap up, what are the key things that our agents need to know about B2B? What are the highlights of working with B2B Bank?
Yeah, so I was going to get into one more slide, just quickly, 1 or 2 more slides quickly, and we'll get into so kind of the quick things that we do at B2B. Keep in mind, we were talking about the underwriting is we do what we call auto approval. So a lot of our loans, once they're submitted, they get auto approved. And these are kind of the key criteria for auto approval. I mentioned those base criteria, but 725, TDSR 35 or lower, net worth 1.5 times or higher. And the biggest thing that we're doing now, if you've done loans in the past, this has changed recently in the last couple of years with Xperia, is that any loan $50,000 or less, 99% of the time, we're not asking for additional documentation. So we're not asking for pay stubs. We're not asking for income investment statements. We're not asking for that. It's just the loan app and the void check. Okay. So Perfect. Once we said key things with us here for B2B is that options are there. So if you want to invest in any of the different fund companies, we offer that option. Easy approval. If the loans are coming in and customers are reading these criteria, then in most cases, you're going to get an approval even within 5 minutes. Okay. Wow. That's quick and easy. If the customer's not, the same situation, it's got to go to underwriting 24 hours. Okay. Yeah. In today's time, right? And that. And then, kind of key thing too is we're different. We've been doing this for a while. No proof of assets, no proof of income. So that kind of makes it faster. One thing I do want to mention to the team, if you are going to do one, reach out to the BDM team. We can help you out. Keep in mind, as we get later in February, things get a little busier. So don't wait till the last minute. And
do you have a time frame? Did you say a week out
I would say
before the
week
deadline?
Before. So I was kind of looking at the calendar, and this year, because it is a leap year, technically the deadline is February 29th.
Yes.
So don't forget that leap year. So I kind of say by the 21st, you want it in because, we got to see the app. So another advantage of BD Bank, we can email documentation into us. We can use DocuSign to sign the application too. So we get a little faster, electronic. You don't have to go sit with the client face to face. While you're doing the app, you can leave it and come back and forth to it if you have to get some information from your customer. But I try to say the 21st because, in years prior, and Shawn knows he's been in the industry for a while, we used to fund RRSP loans in like mid-March. I had stuff fund in April, and the clients still got their tax receipt. Unfortunately, that's not the case anymore. A lot of the fund codes, they want it on the deadline. They may give you a day or two grace, but if it ain't there by then, it ain't there. Now, we'll try and work with the fund company to get you the contribution receipt. But if it's not in time, guys, unfortunately, we're limited what we can do these days. Like, it's in the last 2 years, it's really changed. So if you're going to do it, and an RSP loan, especially if you've been in the market, it's a good way to kickstart your year. You're getting those larger lump sum investments, building that book, building that AUM. So it's a good way. Hey, I had a great first quarter, and now I'm just going to build some momentum and really get the year chumming away, right? So, and the holidays are there. So yeah, holidays are there. Good debt versus bad debt. Good time to talk to that. But those are kind of the closed notes. And like I said, if you have any questions, reach out to us. The wholesale team, we're here to help you guys out. As far as getting you through
one last thing that I wanted to know: setup. Do the agents need to be set up on the system?
So
do they need to register?
Yes, you have to have a user ID and password. In most cases, a lot of the Xperia agents are already built into our system. It's just a matter of reaching out to host. Like, I can help, your customer service can give you your login criteria. If you're newer with the company, a lot of times what happens is you can go onto our website and kind of start the registration process. And then we have to actually contact the Xperia head office to be, hey, is Shawn who he says he is, right? We do a verification check, right? It's a compliance thing, right? Xperia is pretty quick. They'll get back to us and then we'll set you up. So that could take a day or two. So if you're going to do something, you're thinking about doing something, in the next week or so after this podcast, try and make sure you're registered. Get that done now, right? And if you don't do one, you don't do one. Doesn't mean you're not going to do one down the road. But at least that door is open and we're not waiting till February 23rd to get registered and set up, right? And you're in a crunch time. So be proactive and get her done.
There you go. So the takeaways here: first of all, get registered if you're not already registered. There's no reason not to do it. You don't need a first piece of business like you do with insurance companies, right? So get registered so you're ready to go. Great point Mike just made about kickstarting your year. Look at your client base, look at your prospects, look at your existing clients. Who would be a good candidate for an RSP loan? Individuals in a higher tax bracket who probably haven't made enough contributions into their RSP for whatever reason over the last number of years. So make sure you reach out to them. Give yourself lots of time. Don't wait till the last minute. Get on the horn, start talking to your clients, start getting that loan paperwork in, start getting it funded. You get to choose whichever carrier you want to partner with for the actual investment management. And if you've got questions, we're going to make sure that you are given Mike's contact information, B2B's contact information, and you all know how you can reach out to me anytime via email, text, or phone. Mike, before we wrap up, is there anything you want to say?
No, I just wanted to say I hope everybody had a lovely holiday season. But now is the time to get to work. The partying is over, and let's get into 2024 and let's make it happen. Because if you don't do it, no one's going to do it for you.
Absolutely, Mike. Thank you so much for your support. Thank you for your friendship. And to everybody else, champions, we support you, we appreciate you, and we wish you all the best. Create a great day.
Thanks for watching Xcelerate. I have another great video right here, so check it out. And remember, Xperia Financial Group is about real people, real ownership, and real change. Let us help you accelerate your growth.